You've probably heard about GameStop shares going through the roof. Here's how it happened and what it means. On the stock market, you can buy shares in a company, and the price can go up or down depending on how much demand there is for those shares. Generally speaking, you hope to buy shares at a low price and sell them again when the price is higher, so you've made a profit. But people can also make money betting that a company's share price is going to go down. That's called shorting stocks, and it played a role in what happened with GameStop. Here's how it works. Say you own a share of an apple tree, one apple, and you're happy to lend it to me in exchange for some commission or interest. The value of this apple on the open market is £10, but I think that's going to go down in the next few days. So I immediately sell the apple for £10 and I've made £10. Brilliant, but I still owe you an apple. So in a few days' time, when the price has fallen to £5, I buy an apple back and return it to you with an interest payment, and I've made a nice profit. Now, usually there'd be a third-party broker involved in all this, but this is the basic principle. The price drop in that example was big, but it doesn't have to be. Multi-million-dollar investment companies known as hedge funds can do this at scale and make a profit from even a small drop. And by selling large volumes of shares at once, they can push the price of the shares down to their benefit. But if the price of the shares goes up after they've sold, then they're still on the hook for those shares, they have to return them, so they may be forced to buy them back at a higher price and can stand to lose a lot of money. And that's what happened with GameStop. People on the Reddit message board Wall Street Bets had noticed something about GameStop. That's a high street video games retailer in the US that's been struggling, especially during the pandemic. They saw that hedge funds were betting against GameStop in a big way, shorting more shares than even exist. How? Well, say I've borrowed your apple and sold it to somebody else, and that person lends the apple to someone else who also sells it. Now, two of us are on the hook for an apple, and you might have got away with it. But investors on Wall Street Bets saw the opportunity to buy GameStop shares, hoping it would push the price up and totally mess the plan up for the hedge funds. And it worked. Now there was more demand for the shares than there was supply. The hedge funds were forced to buy their shares back at large prices, losing billions. And along the way, some users on Reddit made a fair bit of money for themselves too. After seeing what happened with GameStop, people turned their attention to other brands like AMC Cinemas, where the same thing was happening. Some of the platforms and apps that let you buy and sell shares, like Robinhood in the US, then intervened, stopping people from buying GameStop shares, which really angered a lot of the investors who said Robinhood was interfering in the open market and protecting the hedge funds. For its part, Robinhood said it had limited trading to protect investors and it had to comply with regulations. It has since allowed some trading of GameStop shares. But there's certainly a view that there's one rule for big corporations and another for independent investors.
Now that we're capitalizing on it, it's crazy how the system is flawed and we are in the wrong. It makes no sense to me.
I think Robinhood stopping investors from buying the stock is the biggest example of market manipulation. And I think, go look at their app reviews. They're getting hounded right now.
If they think Wall Street Bets should be investigated by the SEC, Robinhood should just as equally be investigated. The fact that they can pigeonhole and select stocks that we're not allowed to trade openly in the free market made by the people with our money is horrid, and it makes no sense.
So what happens next? Well, as with any investment, the price could go back down, and people who bought GameStop shares at a high price could lose money. But for many of them, it wasn't about making money in the first place. It was about sending a message. Many say this is a turning point for stocks and shares, and it could happen again.
I don't care about the money at all. I could lose everything and I'd be so happy because I just love what's going on.
This could be a trend moving forward. I mean, we're playing within the rules. We're not sharing any insider information. It's just a collective group saying to buy specific stocks. So you can't really control this. Once the internet takes hold of this, there's no stopping it.